Silicon Valley Bank and major banks fall. Are banks safer all over the world? Let's have a closer look. After the Silicon Valley Bank's collapse, banking industries, eco-business industries, and ordinary businesses all over the world have been on the edge and are grappling with the consequences of Silicon Valley Bank's collapse. The financial uncertainties surrounding Silicon Valley Bank's collapse and closure all over the world is huge. Please kindly subscribe to Numa Finance Television. Send the link of this vital financial information video to your friends and folks. Thanks. Financial experts in the US says federal regulators faces huge hurdles implementing effective reforms due to opposition from large banks, and most of the rule changes suggested did not adequately address the major causes of the fall of Silicon Valley Bank and indeed problems in some banks all over the world in the likes of Barings, Credit Suisse, Citibank and the likes. The Governor of Bank of England said it is on high alert and will remain vigilant to further turmoil after the collapse of major banks all over the world, including Silicon Valley Bank. He said the collapse of Silicon Valley Bank is the most rapid since that of Barings Bank in the mid-1990s. The Governor of United Kingdom's Bank of England said it had been decades since a lender had gone from health to death within a matter of days, saying that Barings, which was brought down by a financial trader, was the only worthwhile comparison to what happened to the US tech lender Silicon Valley Bank. The Governor of Bank of England further said, "I don't think we are at all in the place we were in 2007, but we have to be very vigilant. I don't think there's a problem going forward." However, he said, "I do not want to give you the idea that we are not very vigilant because we are in a period of very heightened, frankly, tension and alertness." Bailey's remarks came after what he said was one of the swiftest bank failures in living memory. He further comments that, "In my experience, which goes back 30 years now, the collapse of Silicon Valley Bank was probably most prominent, just like that of Barings Bank, which was London City's oldest merchant bank, which collapsed in 1995 when a trader ran up huge losses after concealing as much as £827 million in unauthorized trading positions." Barings was later bought by Dutch bank ING for a nominal sum of £1 sterling, though much of its assets were later sold off. Silicon Valley Bank, the 16th largest lender in the US, collapsed on 10 March this year after failing to raise emergency funding to plug a multi-billion-pound shortfall in its finances. The US bank, which was an important lender to the tech industry and venture capital investors, was struggling to keep up with an increase in withdrawals from customers who had seen funding dry up in recent months. Panic and fears over its health prompted a severe drop in its shares, spooking customers and causing a run on the bank, which was seized by US authorities. On March 10th, the bank, Silicon Valley Bank, has $212 billion of assets, failed with spectacular speed, making it the biggest lender to collapse since the global financial crisis of the year 2007 up till 2009. Majority of Silicon Valley Bank's depositors were tech business startups with accounts holding well in excess of the $250,000 that is insured by the federal government in the US. By loading up on long-term bonds, Silicon Valley Bank took great risk by betting and speculating on interest rates staying low. The bet went wrong and did not pay off. This made the bank short of liquid funds. Majority of its shareholders were wiped out and bondholders took big losses. It revealed the flaws in America's banking sector. Silicon Valley Bank probably had enough assets for depositors to have got all or almost all of their money back, but only after a long wait. This incident left many tech firms facing life in a financial deep freeze. Roku, a streaming giant, had nearly $500 million tied up in Silicon Valley Bank. Moreover, across the tech big sector, layoffs and bankruptcies are on the horizon. America's financial regulators and government seemed to fear that depositors were losing faith in other banks too. Thus, on the 12th of March, U.S. financial regulators and the government deemed Silicon Valley Bank is too big to fail and went on to guarantee all the bank's deposits. Will it work? A question ranging in the minds of everyone. In Asia, financial authorities are trying to downplay the turmoil at Credit Suisse, saying that they do not expect the takeover of the troubled Swiss bank to affect the stability and health of local lenders and banks in the Asia region. The Monetary Authority of Singapore, MAS, mentioned that Credit Suisse would operate as normal in the city-state, with customers having full access to other accounts following the lender's purchase by UBS Group recently. Although Mayes promised to continue to closely monitor the domestic financial system and international developments, however, they did mention that they are ready to provide liquidity through its various facilities to ensure that Singapore's financial system remains stable and financial markets continue to function in orderly, efficient manner. The Hong Kong's Monetary Authority, HKMA, and the city's Securities and Futures Commission said that Credit Suisse is open for business as usual, and the bank's local assets of 100 billion Hong Kong dollars represent less than 0.5% of the total in the Chinese territory's banking sector. However, the Hong Kong's Monetary Authority did mention that the threat to local banking sector of the turbulence in Credit Suisse are insignificant, they mentioned in a statement. The Hong Kong banking sector is resilient with strong capital and liquidity positions. They stressed that the total capital adequacy ratio of locally incorporated authorized institutions stood at 21% at the end of 2022, well above the international minimum requirement of 8%. In Japan, however, Chief Cabinet Secretary Hirokazu Matsuno welcomed moves by regulators to help boost confidence in their banking sector and said he did not expect the turmoil facing lenders and banks in Europe and the United States to affect Japan's local banking sector. Matsuno said, "Japan's financial system is stable as a whole, meaning there is no cause for alarm or panic. All these information emerges as markets in Asia may be plummeting or sliding in the market amid persistent jitters over the health of the global financial system, with key indexes down in Japan, South Korea, Hong Kong, and Australia." Although China's blue-chip CSI 300 and Shanghai Composite Index made gains, as new funds and monetary easing measures by Beijing helped to offset the concerns about global banking. However, UBS, Union Bank of Switzerland, Switzerland's largest bank, headed by Colm Kelleher, has worked in the US, Europe, and Asia-Pacific and has extensive capital markets and securities markets experience. Mr. Kelleher graduated with an MA degree in history from Oxford University and qualified as a chartered accountant at Arthur Andersen & Co. He is part of the decision that made UBS agreeing to buy Credit Suisse for 3 billion Swiss francs, 324 billion on Sunday amid a growing crisis of confidence in the global banking system. In the African banking sector, an article written by Mark Napier, the Chief Executive Officer of FSD Africa, said this about banks in Africa. He said a Mozambican bank named Nosso Banco's license was cancelled, and that a Bank of Tanzania stepped in to replace the management at Twiga Bancorp, a government-owned financial institution which was reported to have negative capital of about 21 billion Tanzanian currency, and just over the border in Uganda, Crane Bank, with its estimated 500,000 customers, was taken over by the central bank, having become seriously undercapitalized. In Democratic Republic of Congo, the BIAC, the International Bank for Africa in Congo, the country's third largest bank, was forced to limit cash withdrawals after the termination of a credit line from the central bank. And in Kenya, Chase Bank collapsed in April, bars after the failure of Imperial. In Europe, Mairead McGuinness, the European Commissioner for Financial, mentioned that there are risks of higher inflation and rising interest rates in the finance and economy of Europe due to the collapse of the Silicon Valley Bank. She mentioned that although the closure of Silicon Valley Bank may be having limited impact on the European Union financial sector, she said that authorities should stay alert to the dramatic saga unfolding in international markets. McGuinness also warned of the dangers posed by stubbornly high inflation, which has led central banks around the world to hike interest rates at an unusually aggressive pace. We have to stay alert to this new environment. Higher inflation and rising interest rates present different challenges to financial stability, McGuinness said. The problem of unrealized losses on the bond portfolio of Silicon Valley Bank is an illustration of that, she stressed. McGuinness' comments came at a time when shares of European banks were rocked by turmoil, plunging as much as 10%, a reflection of growing anxiety among investors following the collapse of two mid-size American banks, Silicon Valley Bank and Signature Bank, in recent times. Société Générale and BNP Paribas in France, Deutsche Bank in Germany and Barclays in the United Kingdom were all affected by the recent banking collapse turmoil. But Credit Suisse was the worst hit by the market turbulence, with its shares plummeting to record lows during trading. Overall, it is difficult to say what will evolve in the coming months about whether banks are safe all over the world, but we just have to wait and see. Please don't forget to like, share, and subscribe to Numa Finance Television. See you in our next video. Thank you.